What's up, guys? Crypto Muser here with your daily news and analysis in the crypto markets. Now, we've had a crazy last couple of days in the crypto markets. Twitter's been crazy. It's been honestly some of the most entertainment I've seen on Twitter in a long time. I mean, those bulls that have been so bullish on this market for the last couple months or so, even with this last capitulation event, those bulls have turned bears very quickly. I don't see a bull in sight now. What that tells me usually is that, when 99% of the market is leaning in one direction, it usually goes the opposite, right? It just always gets you on the wrong foot in this market. When you expect it to go one way, it goes the other way. So it's really hard and sometimes when you think that everybody's going one way and you want to go the other way, it still goes that way. Making these guesstimations is always the toughest thing in this market. That's why no one is ever 100% right. If there was some person out there that gets these has the magic TA that gets this right every time, point me towards him and we'll all make some money following his guidance. But that just isn't the case. Most people that especially my man Crypto Lifer on the Crypto Lifer channel, he tells you we're trying to make our best judgment by looking at the charts, and it's always at the end of the day, you never really do know, right? You never know 100%. You can play the 60%, 70% guesstimations, but there's always that chance that you could be wrong, and that's just the way these markets work, right? No one, like I said, point me to that person that gets this right every time. It just does not exist. The way I look at markets, I look at it in a macro view, in a long-term aspect. I see these as buying opportunities. If this is a bear market, then guess what? Bear markets is where millionaires are made, right? When people are so fearful in this market, they're getting out and they're fearful and they're panic selling. That's usually a good time to get in, right? When the fear and greed index is at 10, right, this morning, that's usually a good time to start dollar cost averaging into these great projects. But the key is finding the good projects. Right now there's like 18,000, 20,000 coins out there. After this next bear market, I'm telling you right now, guys, 95% of these coins will disappear, right? If you don't have a real use case, if you don't have a real utility, you're going by the wayside. You're done, right? There's so many useless coins out there, real shit coins that do not deserve anybody's money, right? And they are all, it's like there's so many coins trying to do the same thing. It's like back in the dot-com bubble. There's just so many. You put a .com at the end of it, people were investing in it. You really have to do your own research and really, go through hours and hours of research to figure out which coins actually have a use case and which coins actually people will use that are actually changing the world we live in, right? That's why I'm so bullish on XRP. I know that XRP is being used already, and it's only going to get more and more adopted as the years go on. Smart contracts. I think I saw Mark Cuban recently talk about, it's all big talk, big game of talking all this about Ethereum and Solana and Cardano about smart contracts, but until these are actually utilized for real business opportunities, it's all talk, it's all show, it's all speculative. So Ethereum for sure is the front runner still, even with these gas fees, because it's the OG of the smart contract game. But Cardano, Polkadot, Solana. I think Solana had a big hit. Same with Luna recently, because it's like when you try to rush out your technology and when people see kinks in the armor and the security or whatnot, that usually is a bad sign for the future of that coin. Now, the next thing, before I get into the video, guys, if you guys could please like, subscribe, and leave a comment down below, would be very much appreciated. But the first thing I want to talk about is along those lines where some of these coins, a couple months ago, or even a couple weeks ago, Luna was looked at in the UST coin, stablecoin was looked at as a revolutionary idea, right? To peg a stablecoin to Bitcoin, right? It's like pegged to Bitcoin, US Tether, and the dollar, I think, which is very, crazy when I first heard this. but maybe it'll work out, right? That's what everybody thought. And I think it's called the LFG, the Luna. I forget what it stands for, but the Luna Foundation or whatever. They kept buying Bitcoin, right, with their reserves, and they were basically backing their stablecoin by the USD, Tether, and Bitcoin. But what happened was, as Bitcoin kept going down and dropping, a crazy thing happened, right? UST, which is a stable coin, actually dropped in like 25-30% in value. It was down at, I think it's 69, 60, 68 cents at one point. That's pretty troubling when you have a stable coin that should be pegged 1-1 to the dollar, is down there at 68, 67 cents. So why did this happen? J.W. Verrett, who's a great follow on Twitter, by the way, he used to be a analyst for the SEC. He said, Treasury and IMF's claim stablecoins are systematically risky. Let's run an experiment. Wait, we just did. One of the largest stablecoins just massively depegged. All of the crypto is down, sure, because of macro effects, but no systematic impacts for USD depeg. Now, this is where it gets interesting, and I don't think I've ever heard. I haven't heard a lot of people talk about this, but I've been seeing this rolling around Twitter. This is Jacob Canfield, and there was a bunch of people that were tweeting this out, and I'm just saying ahead of time, I don't know if this is 100% true, but a lot of people are pointing it out there, and it makes a lot of sense if it is. So Citadel, if you don't know what Citadel is, it's basically the capital venture capitalist firm that basically owns Robinhood. And with all I don't know if you guys have seen or have been following what happened with Robinhood during the AMC and GameStop shortage thing, where they basically shut down the buy button on Robinhood a couple months back, and that whole fiasco. But Citadel is basically the venture capitalist firm that owns Robinhood, right? So look what this is. If this is true, then it makes me think. So Citadel borrows 100,000 Bitcoin, trades 25,000 Bitcoin for UST, opens a short, starts dumping 75,000 Bitcoin aggressively. Once Bitcoin reaches 30K, they started dumping UST to make the UST lose the peg to the dollar. Now, Don Kwan, the CEO of Terra, is forced to sell his 25,000 Bitcoin at a major loss to recover the peg to the UST, further dumping the price of Bitcoin. Meanwhile, Citadel is shorting all the way and making money. Now, this just tells you this is like this is like as manipulation. I mean, this is the as manipulative as it can be, right? The fact that Citadel can basically be a whale here and have 100,000 Bitcoin, which is, do the math there, can basically depeg a stablecoin, right? And dump Bitcoin at the same time. And, obviously they're shorting the market, so they're making money as they're doing this. Now, yes, that's manipulation, right? But here's the big picture here. Now, why would Citadel, which is basically a big bank, so JP Morgan, Goldman Sachs, probably are partners or whatever, right? They're highly invested in each other. Why would they do this? I mean, other than just making money off the short here. Now, here's where it gets interesting. Blockchain Backer tweeted this out yesterday when this was happening. Terra UST stablecoin has lost its peg to the USD, currently at 70 cents per the dollar. And then down here, now this is where it gets interesting too, which has caused a massive surge in Bitcoin UST pair. So that means the Bitcoin compared to the UST tether. So as usually if it's tied to the dollar, then it just goes down as any other market. But since UST was going down and Bitcoin wasn't going down at the time, that means the Bitcoin UST pair was actually going up. It actually went up like 20%. So you're telling me that Citadel didn't know that was going to happen and they probably made money off of that too? It's still going. It's going down. I think where was it here? Let me see. I think it got down to 64. So a stable coin that was supposedly pegged to the dollar, but it really wasn't because it was pegged to Bitcoin and US Tether. It was an algorithmic stable coin. It was the first of its kind. So this basically shows that, it really doesn't work if the market collapses on itself. But, if Citadel did this, on purpose to manipulate the market, Here's where it gets interesting. Now, Crypto Whale tweeted this out this morning, and this had me thinking about this whole thing. Now, Janet Yellen mentions UST crisis at Capitol Hill and discusses why we need immediate stablecoin regulations. Now, why would a big bank or venture capitalist firm like Citadel, which is definitely tied to JP Morgan and the other big central banks out there, why would they want to basically put out the question that stable coins are need to be regulated and they're bad investments, or they're bad, very volatile, or they can be volatile, and they're just a dangerous investment? Now, why would the big banks want to do that? Well, maybe because stablecoins are the best thing coming out there in DeFi that would make people want to put their money in these stablecoins, right, and earn 8 to 15% interest, right? This has been the big thing that Gary Gensler has been attacking in crypto and DeFi, are these stablecoins, right? If you can put your money, usually back years ago, you could put your money in the bank and they'd give you high interest. They'd give you 12 to 15% on your money because they turn around and use your money to make money. Why wouldn't you get a piece of that action? Well, obviously in the last couple of years, now the bank doesn't give a shit about you. They'll take your money and they'll give you 0.05% on your money, and then they'll lend it out for 10, 15% and make all the profit. And screw you, right? And then they tell people you should save your money, right? Keep your money in the bank. Now here comes stable coins, right? Where you can put your money. This is what the banks used to do, but they don't do, because they don't want to share the profits with you. So now these stable coins come along, and now you can put your money in a stable coin on an exchange and earn 10 to 15% like the banks used to offer. So that obviously people are going to start putting their money in stable coins and not putting their money in the bank. And what does that do? That hurts the banks. Now the banks aren't going to get your money, so they can lend it out and make money off of you. So what would they do? I mean, wouldn't it be a great idea for, Citadel? Let's go back to that real quick. Citadel to basically dump the peg of the UST coin. Now it looks like this stable coin, people lost tons of money. Now that obviously the SEC and the Treasury Department have to come in and be like, this is why we can't have stable coins, right? This is why we can't allow people to earn interest on their stable coins, because this type of thing can happen and people can, this is bad for investors. But meanwhile, Citadel manipulated this whole thing. Now, I haven't heard anybody talking about this yet. Obviously, there's a lot of talk about the UST stablecoin, everything that happened yesterday, but no one's really asking this question of why, if this is true. Once again, this has been going around. I don't know if this is 100% true that Citadel did this, but if they did, wouldn't it make a lot of sense? Got to think about this type of thing. Definitely, these big banks, these central banks, JP Morgan, Goldman Sachs, they don't want these stable coins, right? They do not want people to have the option to put their money in a stable coin and earn interest. They want your money, right? They want you to put your money in their bank so they can make money off of you. It just makes you think, right? This type of thing does not surprise me at all. If this is true, it would, it's all the same shit in this country. These big banks got all the power, and they manipulate all the markets. They've manipulated the metals markets for years. JP Morgan has gotten fined every year for manipulating some type of market. They made billions of dollars manipulating the metals markets, and then they get slapped a $100 million fine. Do you think that they really care about these little fines that they get? No. And do you think that the SEC really cares about regulating the banks? No, they do not care, because we all know the revolving door with the SEC and other regulators in the government, where they just go back and forth from the big banks to the regulators and vice versa, right? Do you think they want to hurt their future employers? No. I mean, this all makes sense, right? Meanwhile, who gets hurt the most in all this? The investor, the everyday investor, the retail investor, right? Now obviously they're going to come down hard on stable coins, and let's get back into it. So Crypto Whale said that Janet Yellen mentions UST crisis in the Capitol Hill and discusses that we need immediate stablecoin regulation. Now, listen to a little bit what she said here. Here's a little clip of what she said during that hearing.
Note that there was a report just this morning in the Wall Street Journal that stablecoin known as Terra USD experienced a run and had declined in value. And well, so I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate. I would note that there would
Now, maybe I'm wrong here, right? Maybe that you're going to come with regulation and it will help DeFi out and stablecoins. But do you really think they are? Do you think this woman, Janet Yellen, really cares about everyday investors? No. She's worked for the Fed. She worked for the Fed before she was its treasurer. I mean, these people do not give a shit about everyday people. I mean, this dinosaur, I mean, I can't even believe that she's running the Treasury Department. You know, this type of thing does not surprise me. And if this did happen, like I said, if this is true, like I said, once again, I'm not 100% sure. Someone could call me out on this and I could be totally wrong. But if this is true, it makes perfect sense. You know, make these stable coins look like they're the worst thing for investors, right? They're volatile. They can depeg. People can lose millions of dollars. If you let these stable coins do what they're doing. Not true, right? These stable coins could help out everyday people, like the banks used to do, right? Years ago, the banks could, if you held your money in a bank, they'd reward you for keeping your money in the bank. Now they basically, they charge you. If you want to I just started a bank account at Chase the other day. If I want to put $100,000 in the bank, right? They charge me $95 a month to hold my money in their bank. If I have less than $150,000 in my bank account, they charge me because they want that money in there so they can use it to make money. I mean, it's so bullshit that this is the way, and you hear politicians all the time saying, oh, we need to regulate the banks, we need to regulate, yeah, bullshit. You guys have been talking a big game like Elizabeth Warren out there. She's been talking this big game of regulating banks for years, and I see right through that fucking nonsense. She is such a faker. Oh my God, I can't stand that woman. Now she's coming out against crypto, the one thing that can help the everyday person. You're supposedly fighting for the everyday person, and then meanwhile, you're attacking the one thing that can level the playing field and help us out. Bullshit, right? Nonsense. So moving on to the next thing here. Chris Giancarlo, Crypto Dad, I think they call him. He wrote I think that's the nickname he has, but he wrote a book, I think it's called Crypto Dad. I believe he was the chair of the CFTC when he was there under the Trump administration. But he said he's coming out, there's a talk, I forget where it is. I think it's a hearing for the Biden administration, but 9 out of 10 central banks are looking into central bank digital currencies, CBDCs. The Biden administration says it is urgent. I'll be talking digital dollar project tomorrow. Tune in. So central bank digital currencies, efficient innovation, or the end of private banking. Now let me just see where this is. Okay, the Federalist Society, central bank digital currencies, efficient innovation, at the end of private banking. Blah, 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 blah. Central banking digital currencies is the subject of a global debate. In one version, individuals and businesses would hold deposits directly with the central bank. Critics point out that the Federal Reserve would then control how the deposits are used, allocating credit to private sector borrowers and the government spending, arguing that CBDCs would eviscerate the private banking industry and create government surveillance on all financial transactions in the accounts. An alternative version is that CBDCs take the form of a tokenized dollar distributed through the banking system and operating in parallel with paper currency and bank accounts. Supporters say this could yield low transaction costs and more rapid settlement of payments and could strengthen the international role of the US dollar. Now, when I read that, what came to mind? What came to my mind was XRP, Ripple. I mean, they've been working with major banks and institutions with CBDCs for years now. And the thing is about CBDCs, right? When each central bank has a CBDC, and even we as a government have a CBDC, central bank digital currency, these will be walled gardens, aka they can't interact with each other, right? They're not interoperable with, obviously JP Morgan coin and Goldman Sachs coin can't just send it back and forth with each other, because it's like any other payment today, right? You'd have to have a relationship, you'd have to have pre-funded accounts with each other. But if you had a bridge currency, right, like XRP, you could bridge in between all these CBDCs. Now that's where Ripple basically comes in. So let's go back to the quick, what Giancarlo said, 9 out of 10 central banks are looking into central bank digital currencies. So this is happening, right? In the next 5 years, every central bank and government probably will have their own CBDC. Now, to be interoperable, because it's all about interoperability, to be interoperable between each CBDC, you need XRP being that bridge currency. And I'm telling you guys right now, Ripple is the only one viable technology utilizing XRP to fill that gap, to be that bridge currency. Don't take my word for it, doing our research and figure it out yourself, but I'm telling you right now, the only. There's really no competitor out there other than Ripple utilizing XRP. So yes, the markets are in turmoil. We're seeing crazy fear out in the market, but look to the long term. You see where this is going. You see the future of finance and CBDCs, the metaverse, DeFi. Understand where this is all going. Like I said in the beginning of this video, at the end of the next bear market, 95% of these 20,000 plus coins out there will be gone. So it's up to you to do your own research and dollar cost average into the coins that you think are going to have a viable future, that actually have use case, that actually have utility. So like I said, do your own research. Don't take my word for it. I'm just here to give you the basic information, the basic education, so you can, find the information yourselves. The last thing I want to say is along the same lines here. So this is a quick tweet here I saw, and it's not like nothing about Ethereum. And just, you can plug any crypto in there. But this guy said, I held Ethereum from 826 down to $50, and then up to 4,500. Try your best. I have been dead inside since 2018. Now, what he's trying to say here is these markets go crazy, right? When I first got in this market, I started buying XRP at like 20 cents, went up to 30 cents and went down to 17 cents, and then went up to 60 cents and then down to 11 cents. It's like all these swings in prices in the last 4 or 5 years, I've just gotten used to it, right? I've totally taken the emotion out. When prices go back down, I dollar cost average, I take nibbles here and there. I don't even look at my portfolio anymore, because the only price targets that I have, or the only times I'll look at my portfolio and even think about selling, is when I get towards my price targets. The easiest thing, it's like here's my total investment strategy here. I'll give you guys, my little hint here, a little secret of my investment strategy. I do nothing. I buy and I do nothing, and I wait. I sit on my hands and I wait for my price targets to hit. If it takes, a month or 5 years, I just wait. I just stay patient. I obviously do not invest more than I can, right? I don't invest my rent. I don't invest my food money or whatever. I only invest money that I can afford to lose. So that way, you can just hold it in there and wait. Be patient, right? At some point in time, I'm telling you guys right now, if you look at a long-term chart, right? In 5 years, I'm telling you, the prices that we have now will be much, much higher in 5 years. So all I do is I set price targets of where I want to sell 15%, 20% of my bag, and I wait. I wait till that price target hits, and I sell. And most of the time, I have sell orders set up, so I don't even have to look at it. I'm telling you guys, it's really that easy. You got to take the emotion out of this game. If you want to be a day trader, that's good and all. You got to put some serious work into it. And I'm telling you, 95% of day traders lose money. So, to play the long game, it's about patience. It's the biggest part of this investment is patience. So I'll just leave you with that, guys. Remember, please like, subscribe, and leave a comment down below. But remember, I'm not a financial advisor. Please do not take anything I write or say as financial advice. This is for entertainment purposes only. And thanks, guys, and stay in there, and we'll see you on the next one.